Hey, good evening, everyone. Thanks so much for coming up for giving me your time this evening. This is Mark from Right Line Trading, and I wanted to show you um, our completed Forex platform. It's the first time that I've ever shown it, and I think what you're going to see is really an amazing tool to allow you to trade the Forex. We've put an enormous amount of work and effort into it, and we have it integrated and operational. And I'm thinking really seriously about trading the Forex at 2 a.m. Eastern time in the evening. Now, I just want to unfortunately start with a mandatory disclosure, and then we're going to get right to it. We're going to look at really very little slides. We're going to assume you know a little bit about the platform, but I'm going to go through it fairly rigorously. But I'm not going to do it off the slides, and I have 50 or 60 slides that I could use. Now, all signals and trading opportunities provided both orally, written, or electronically that are disclosed to visitors or subscribers are for educational demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitors or subscribers within the futures or Forex markets, nor for any profits or losses that may be incurred. Everyone knows that there's the involvement of substantial risk, and it should be understood that you can lose a substantial amount of money. So trading may not be appropriate for everybody. Careful consideration of your financial position should always be made prior to trading. Right Line Trading is not a registered financial advisor and not a licensed commodity trading advisor. Now with that, let's take a look at one of the markets. Let's take a look at now I'm going to take this component by component. This is the dashboard, which comes with the system. But first, let me describe the system to you. I'm going to take it apart by piece. Now, I put up 8 pairs, which is definitely tradable, since you are going to be getting the trade scanner. Now, the trade scanner a second ago was just flashing on the alert a whole bunch of trades. Right now, it's sort of calmed down a bit, and we don't have the go sign on any market. So we basically could just stand down. But let's take a look at the euro yen. I'm not going to drop the dashboards. Now, I want to look at it component by component. Let's not look at any trade or trade entry yet. Let's just look at the software and see what it's assessing and how you would look for a perfect entry. And in fact, we've got one right here. Now, the Laguerre line is just crossing below the 80 line here, giving you the down arrow. And you have the okay here completely to take this trade short. On the euro yen, going to make approximately that's 87 pips. And you're not going to get in. You're going to get in here. You're not necessarily going to get the entire move, but you're going to get close to 87 on this trade. Now, what makes this trade so perfect is really more or less what we need to ask. Now, there's the mathematical theory that relates. Let me just back up for a second. The purpose of a piece of software is to define the risk associated with a trade entry and define it for you in a very, very clear way that allows you to take a trade entry, understanding the associated risk. I mean, I think that's what most software developers who provide software packages don't get. I mean, the discretionary component of your understanding of how much risk is associated with the trade entry. And what are the things that we do to allow us to take an entry that diminishes risk to the bare minimum. Now, the first and most important, now each individual Forex pair has already been optimized individually. This quant line is unique. The speed of the chart is unique. And the Laguerre speed is unique. Now, if you want to trade other Forex pairs, and we have them optimized for about 15 pairs I trade that we don't have set up. I just put up 8. Now, the most important independent variable is the multi-time frame alignment and trend. It's right here. Now, you want to take a trade when this Forex market, I'm just going to move this dashboard down to here, which is the euro yen, is aligned to the downside on 3 time frames: your trading time frame and your 2 higher time frames. That is the most important independent that you got. When you don't have a multi-time frame alignment, almost all the other things are going to be far weaker. And if we look, this is where the market chops. This is down bias, but it's weaker. I'm going to go over the colors really quickly. And this is where you want to step aside, because the power of any entry signal is going to be weaker when there is no multi-time frame trend. Then, when the multi-time frame trend develops, right here is when you get a potential great trade. Right here. Same thing here. Now, I only have it loaded for a few days because I've got so many charts up. I don't want to overload it. This one I'm gonna load for a few more days. I've got 8 days to load on here. I'm gonna put in 15, 16 days. So I have a little more data to look at. Now, I know this is going to be redundant for a lot of traders, but I'm going to go over the power of the different up colors and down colors, because I think that since this is such an important component of trading, it's never a problem to review it. Now, there's your perfect trade right there. And remember, I'm not looking for trade entries here. All I'm looking to do is define the risk associated with the trade. Look at this trade to the upside right here. With dark green background bias, you're almost always going to get a move to the upside. Same here. Move to the upside. Now, just because you have the dark green doesn't mean you have, there's another entry. There's the oscillator signal, the move up, and your perfect entry. And this is what you want to cherry pick from 8 pairs or 10 pairs or 12 pairs, as many pairs as you think that you can handle. You want to take the lowest risk, potentially highest reward trades out of multiple Forex pairs. So the first thing we're going to look for is the background color. And I'm going to define that background color and the power of it right now. Just let me I already have Paint open, and I already have made some drawings on it. I don't want to lose these drawings. So I'm just gonna do it to the side here. Now, let's take a down move. On a down move, the 50 is down. This is by definition. And the 15 is heading down. Now, here's our 50, this thick color, this thick moving average, and here's our 15. And let's look for a down move. Now, it so happens this pair is only going up, but let's look for, here's dark pink. Now, what does dark pink mean? Dark pink means that on the higher time frames, the 15 has crossed the 50 to the downside. Hang on one second. Has crossed the 50 to the downside, and price is here. So price has broken all support. The 50's down, the 15 is down, and price is below both. Now that is the sweet time to trade, and when you desperately look for a good entry. Now, this light, let's go to the second most, this bisque color, which is a down, is when, I'm just going to use the, is when the 50's down, the 15's down, price is below the 50, which is the only time we trade short, but the 15 has not crossed the 50 to the downside. It's still above it. Now, this is a riskier color to trade because this 15 may never cross. It may come down to here, and let me tell you, it is a dangerous color, but you can only trade short. It defines an area where the only direction you can trade is to the short side, and then may come right back up. And that's the best. Now, it could cross and give you a beautiful short trade, but you know that the risk associated with this trade is greater. The other thing that you can't know, unfortunately, no matter how hard we try, it's just an impossible parameter to create on the chart, is the 15 100 miles above the 50, or is the 15 just about to cross the 50? This you cannot know. You can make a guess by looking at price action, and the last time you got, see, there's the up color, and you know before you can get the down color, you've got to break all support. So you can make an educated guess, but you can never really know for sure. Now the weakest color is this light pink. That's where the 50s cross the 15 to the downside, price is below both, but then the 15 has gone flat. So you've lost a lot of downside momentum. Again, and you can see how it sort of, when the 15 went flat, right here it heralded the end of the trade, the end of the trend. So although again, it's down, it's a down trade only, any trade that you take to the downside is going to be associated with more risk. And that's what we're looking to define here, just risk. We can't do any more. So let's take that all off, and let's do that with an up trade, just to reinforce it. Here's the 50, whoops. Now the power of the system comes from its multi-time frame assessment. Everything we do is on multiple time frames. Here we're looking at the two higher Unorenco time frames. We're looking at the two higher, if you're trading a time chart and it's a 2-minute, we're going to look at a 6 and an 18-minute. If you're trading a 5 range, we're going to look at an 8 and a 13 range. Background bias has no input. It's going to read what you're trading, and its coding will tell it what the 2 higher time frames are. Strongest is that dark green. That's the sweet long trade. You look for an entry. 15's above the 50. Price is here. It not only assesses the trend, it assesses market structure. You know you've broken all resistance to the upside, and you're looking for a long trade. All you're looking for is an entry. When you get this light blue, or just this blue here, I guess it's a sky blue, then you know that the 15 has gone yellow. Lost momentum. You can still take a long trade, but you don't have that powerful momentum you do on the dark green. And then that in-between color, I can find it. And there's a third color. It's cyan. Should be here somewhere. It's nice that I'm not finding it. Sometimes you just don't. Here it is. This cyan color is exactly the same as the bisque color on the down move. This is where oops, the 50's heading up, and the 15's heading up, but it hasn't crossed the 50 yet. Price is defined by the software as being above the 50. So you're in a strongly trending market, but the 15 has not yet made it across the 50. And so we get this color. Now between the three, I believe that obviously the dark green is the most powerful, and the cyan is the second most powerful. Because although the 15 hasn't crossed the 50, you've got strongly trending, you're in a strongly trending market. And then the weakest background color is that light blue, which is right here, right in here. Down, strongest down is the dark pink. That's where you really, really want to try to get yourself a short trade, right here. And this is the weakest, where the 15's gone flat, even though it's crossed. And this is the middle, where the 15 and the 50 are heading down, but the 15 hasn't crossed. And if you open the indicator and look at bias, you'll see those three colors: dark pink right here, and dark green. Strongest. Second strongest is the bisque and the cyan. Weakest we have is misty rose, and we have is powder blue. And you can change these colors to anything you like. I mean, if you want to be able to remember which is the strongest down, middle down, you can just alter these colors. These are the colors you would get, but they're all configurable. So we've defined the most important independent variable on the chart, and that is the multi-time frame trend. And that is really, really important on the trade. The second thing that I believe is extremely important. Now we define certain other ways. This is more towards our trading methodology than it is to anything else. We always go long above the 50 only and short below the 50 only. We believe that the bears are in control below the 50, the bulls are in control above the 50, and we do not counter trend trade. But what I want to do is go back to the indicators. Now the quant line here is extremely important. The system is defined by a pretty sophisticated neural net. And I want to put that in. because it's really strongly operational on the Forex, which makes the Forex a really powerful platform. This platform extremely powerful on the Forex. And the neural net theory, I think, is accurate, and it describes the theory that no individual market moves in isolation, that all the markets in the Forex are linked. In fact, all the markets in the world are linked in one association or another. And that all institutional trade money and all money itself is simply rotated from one financial instrument to the other. Now, I believe in the Forex, that's really strongly operational. Institutional traders will decide that, the pound cross is extremely advantageous, and they're going to bid up all the pairs associated with the pound, or the euro cross, or there's just there is a relationship, obviously, between each of the individual Forex markets. And what we've done is to find the three markets that most powerfully correlate in direction and assess their direction in this line. So when this line is green, you know that the correlative markets associated with the euro yen are either going up because they have a positive correlation, or they're going down because they have a negative correlation. And the ones that negatively correlate are as powerful as the ones that positively correlate. The ones that positively correlate and go up greater than 70% of the time when this market goes up are just as important as the ones that go down greater than 70% of the time when this market goes up. All we're doing is tracking the direction of big money. So we want to trade when this quant line is green. And quite frankly, you really want to look for green background and a green quant. Because what we're doing is what we want to do ultimately, although there's lots of software tells you they can track the direction of institutional money, all you can really track is its footprint. And the footprint that it leaves is, number one, it creates this multi-time frame trend. The multi-time frame trend is never created as a random chance event. It only occurs when big money is creating an alignment of 3 time frames. This line is never going to occur as a random event. It's only going to occur when institutional money is doing a sector rotation of money out of one set of Forex markets into another set of Forex markets. And you can see that it correlates fairly closely with the background bias, as it should. When institutional money is pushing this up on 3 time frames, you should see it in these correlative markets all moving in the appropriate direction. Now listen, every now and then it won't correlate, and sometimes you'll even get an inverse correlation. You'll see a touch of red on an up move. This is at worst a 70%, and at best it can approach 100%. And if we look at the trades, if we look at the setups, when it's yellow, there's no directional flow to money. Money has no defined directional flow. Institutional traders are not participating. Background bias goes clear, and you're going to stay away. Because if you try to trade a chop market, and we define chop really well, you're going to get burnt and you're going to get stopped out. Now here again, there's no money flow, no institutional money flow, no correlation, no multi-time frame correlation. You get a little touch of it here. So you get a little red here on this move up. There's no 100% correlation. And this is not assessing price on your trading chart. Or this would be green, because price here is moving up. But you get that touch of red anyway, because it's looking at 3 other markets. Then it finally kicks in, and you're looking for your up move. So this is extremely important in trading. And those are those 3 correlative markets which create part of the neural net we're looking for. Now, the other component of the neural net are these dots and these X's. Now, what they do is something a little bit different than this does, but they're looking at the same thing. They're trying to assess the direction of institutional money. And you see that they go from light, there's a light color, to a darker color, to a lighter color. See right here, there's even the lighter color. And what they're doing is a real complex analysis. And I'll tell you what they're doing. I showed you the direction I showed you how, whoops, wrong line. I showed you how. I mean, this is not a simple platform, and it's making a lot of complex calculations, but visually it's easy to read. I just want you to understand what you're looking at. What it's doing is it's taking the correlative markets on a different time frame, and it's doing background bias assessment. When this dot is dark green, the 15 is above the 50, and you've got this dark green background bias on your 3 correlative markets. This is on a faster time frame, and this is on a slower time frame. So this is just looking at the trend. If the trend is up, it's going to go to green. This is telling you where the markets are on a structural basis. This is going to go green if the moving average that it's assessing is 2 miles below the 50 and the 15, as long as all 3 markets are heading up. This is only going to go green, dark green, when the 50 is above the 15 and the 15 is crossed the 50 and heading to the upside. So the color of the dot relates to you or tells you the power of the uptrend on the correlative markets. It's simply the completion of that neural net. So when you get that perfect move to the upside, which is right here. Now you only have 1 dot. It's the faster dot right here. You'd like to get a dual dot entry. But what makes this trade, and every trade is going to have a small component of discretion, but what makes this trade still advantageous is that single dot is a dark dot. Although it hasn't kicked in yet on the slower time frame, and it doesn't kick in on both time frames, in the darkest color until here, your fast assessment of the correlative markets is that dark color. So it gives you enough information to take the trade long. So every single trade, what you have to do is make an assessment. You're going to get perfect trades where you get every single independent variable you want. And it's really up to you. There are some trades that are horrific trades. And there's some trades that are so great that if you don't take them, you shouldn't trade, because they're just, I call them gimme trades. And I'll show you, if we go back, I'll show you that gimme trade. There's essentially no discretion involved. and it's right here. Now, it's not quite a gimme trade because you don't have the dual dots, but it's the inception of the trade, and I haven't gone into the Laguerre signal yet, but you have this dark dot. I haven't gone into the 3 line yet, which assesses order flow, stochastic, and momentum. It assesses order flow, stochastic, and momentum on a multi-time frame basis. But this is really a very advantageous trade. This is the kind of trade you really can't pass up, even though you don't have the dual dots. If you're super conservative, you're going to wait for the dual dots and a pullback, and you're going to take the trade here. Now, the only caveat that I have to tell you is this multi-time frame assessment is not handled well by NinjaTrader, and nothing ever repaints. When you close your platform and reopen, NinjaTrader is going to shift every color a few bars to the right. And I can go into the reason why. I mean, I know the reason, and Sergio knows the reason, but we can't overcome it. So, in showing you this platform now, it's 99% accurate, but the thing that shifts the most is the outline color of the candle. Now, if this was magenta, you'd have a perfect trade here. A pullback and continuation with dark dots and the quant and the Laguerre lock short, everything you need to take a short trade. And all of that's going to be reflected here on the dashboard in an alert telling you it's time to take a trade, it's time to take a trade. And you're going to have this chart open, and you're going to wait for that wick and that continuation trade. So we really define risk really, really well, hoping to keep you out of losers, which is really the most important thing in trading, and get you into low risk trades. Now, the best trades come tightest to the 50. That's trading methodology, because the 50 is the mean, and there's always that regression to the mean, and the move of price off the mean is always the strongest. That's why you get this move. If you want to take a trade a mile off the 50, the risk associated with the trade is greater. And remember, you're looking for a big move. I don't think you want to scalp the Forex. If you're looking for a 4 or 5 pip move, fine. You can take the trade here, you can take the trade here. But you want to take a trade, if you take a trade tighter to the 50, the likelihood of getting a really big runner is greater. I mean, that's what you look for. And again, what I want to say is if you trade with specificity, there are going to be some winning trades you just cannot take. Now, this is a discretionary trade. You have the Laguerre. You can see it's heading down, and I believe you have the Laguerre arrow right there. It's giving you the entry. The candle's haloed in magenta. I'm going to talk about that in a second. You don't have the quant, which makes the trade dangerous. You have weaker background bias. Remember, the 15 is flat here on the higher time frames. So it's an entry, but it's a weaker entry. You can take it, but it's associated with greater risk. And our goal, and I think we've achieved it, is to define risk associated with an entry. This is a tough trade, and when you're on the right edge of the chart, like right here, and you've got to make a decision whether the market's going to continue down, this might be a very tough short to take. And if you're cherry picking only the best trades out of 8 Forex markets, this might be a trade you want to let go. If you're willing to take a little more risk, it's a trade you can take and it's going to work. But you have to assume you're making this decision right here, and the trade may come right back up against you. You just don't know that. Now, the next component that I want to talk about is the candle halo color. The candle halo color if I open it up, is our 3 line. Now our 3 line is invisible because I don't really care what the 3 lines tell me. All I care about is the candle halo. It's right here. Now plot 0 is the multi-time frame assessment of momentum. Plot 1 is the multi-time frame assessment of stochastic. And plot 3, which is our most important, and the only component we're going to keep in our next version, is our multi-time frame assessment of order flow. Now, I can go into a detailed description of how we calculate order flow. And if you don't know it, we use the market delta moving average of the 2 higher time frame charts. It's the only way that order flow can really be accurate. And I kind of hesitate to go to some, but I'm going to show you some slides really quickly. Because on order flow, I think it's worth it. And I think this is the wrong deck. Hang on a second. Yep, it is. Let me just open up another slide, and I want you to understand how order flow can completely confound you. And if it's not assessed appropriately, it's going to make your life miserable and give you really bad trades. Now, if you'll notice, there was a big rage, and the rage was market profile. You know, I don't know if I can get to the deck. It was market profile. And if you'll notice, you don't hear much about market profile anymore. And the reason is, for one thing, I never understood why market profile worked. And I don't want to really digress much because it never made any sense to me mathematically. And let me just show you really quickly. If you take the market and here's your 50. Oh, let's say here's your point of control. And here's your value area high. And here's your value area low. And by definition, 1 standard deviation's worth of volume is contained within the value area high to the value area low. Whoops, wrong. And the point of control in a perfect world would be equidistant between the two. Obviously, it isn't a perfect world, and this is a closed system that doesn't describe unity or the perfect order of independent of dots within that. So it doesn't describe a perfect bell-shaped curve. So the point of control is going to be skewed towards the value area high or the value area low. But that 1 standard deviation's worth of data, with this being the price that has the most volume, this is going to be where price is going to want to come back to. Now, why it was always predicated that price was going to break the value area low, come back to the value area low, and then run down, I don't know, because price is going to desperately want to get back to the point of control. And why price is going to break the value area high, come back to it, and then run up higher outside the value area high was something I never understood as to why that should be. Why would price want to move further outside that bell-shaped curve and want to push itself out into the tail of the curve? And that's what's happening when you get a move above the value area high or a move above the value area low. Now you don't hear about it anymore. I haven't heard one program pushing this, one guru telling you to buy market profile. It's because I never thought it worked, and I still don't think it works. Although we created a really good one, we quickly put it in the trash can because it just didn't make any sense mathematically. Now, the market delta and the volume ladder are still around. And for the most part, they are created and assessed just as wacky, as far as I'm concerned, as market profile. They don't make sense mathematically based on the assessment that's being done on them. And if they don't make sense to you, I mean, be very careful. So here's a candle, and here's a candle, and here's a candle. And I just want you to understand what's going into the assessment to create this blue halo or this magenta halo, and how the order flow line, which is the only line that we're going to be keeping in the 3 line, because we now have the Laguerre, how that order flow line is calculated. Now, in each individual tick, pip, or cent value, you have a bid-ask disparity. There are going to be more traders sitting on the bid than there are on the ask, or more traders on the ask sitting on the bid than sitting on the bid. Doesn't tell you who's executing the trades. It just tells you who's sitting there. So you're going to get a number here. And there's going to be a delta associated with each pip, each tick, or each cent. At the top of the candle, there's going to be a number. And that number, let's say, is 343, for instance. And let's say that number is red. That tells you that there are more traders on the bid side looking to sell than on the ask side looking to buy. Because you buy at the ask, you sell at the bid. You're going to sell at the lower price. I'm sorry, you sell at the ask and you buy at the bid. Excuse me. But there's more selling pressure here. But this candle can close up. So if the market delta does not predict the direction of the close of the candle, then what good is it? And if the individual tick value, the delta, the delta disparity in each tick level, it has even less mathematical validity. And if you're looking in here to look for hidden buyers and hidden sellers, I'm telling you, you're barking up the wrong tree, because it doesn't have the power to do that kind of prediction. So what we do is we just take these values, put them in a 15-period moving average, and look at the slope of that 15-period moving average on the 2 higher time frames. And what that 15-period moving average does is throw out the outliers. And the outliers are the negative delta with an up candle. Because, and I hope I'm not running too fast, and this is a lot of information if you're brand new. 1 standard deviation's worth of data, market delta data, is going to close in the appropriate direction. So all we want to do is get rid of the outliers. This is where the market delta closes in the wrong direction, so we eliminate them. And all we do is look at that standard deviation's worth of data, where the market delta is always going to close in the right direction. And we do that by looking at the higher time frames, and we look at the market delta moving average, and that moving average is a 15-period. And that gives us a great assessment of whether there's buying power or selling pressure or buying pressure in the market. So you never want to trade against that halo, because that halo contains that order flow assessment. And that's another important independent variable. So we go back to the euro yen, and I'll show you all the pairs. When you get that magenta color, the hidden indicator, which you can make visible if you like. I choose to make it invisible because it's 3 lines. They're 3 different colors. They're all changing intra-candle. And I don't really care what each individual line shows me. All I care about is that all 3 are aligned to the downside. And on a short move, I want to see that magenta color. Now, the reason we're going to eliminate the momentum and stochastic component of the 3 line, ultimately eliminate the 3 line, is because of our Laguerre. The Laguerre is a better momentum assessor than the multi-time frame stochastic and the multi-time frame momentum assessment, which is based on a MACD. So version 2.0 coming soon will only have an order flow line giving you this color. This will be just as simple as it is now, but you're not going to need the other two components of the 3-line to be in it, and we're going to change the name of the indicator because we're going to get rid of it. Because if there's one thing you should not have in a platform is redundancy. You don't want the same indicator. You don't want different indicators making the same assessment. I hate indicators that use the chart time frame and just have multiple moving averages, because those multiple moving averages don't predict the future movement of price. The future movement of price is being determined by what's going on the higher time frames. I could put 2,700 moving averages down here, and it's not going to have any more predictive value than 1, because it's assessing movement off of the chart's price movement. And anything that comes off the movement of price on the chart can have very little predictive value as to where price is going to move out into the future. It's got to be an assessment taken off of other markets, like our quant line here, which uses 3 other Forex pairs, or it's got to be a multi-time frame assessment, which gives you forward-looking vision. It tells you with a real high degree of precision where price is going to move on the right edge. And indicators that simply do an assessment of what price is doing on your trading chart have very, very little value. So we don't have any of those. And as just a quick recap, background bias, multi-time frame assessment of trend on your higher time frames, ignoring price on your chart. These dots and X's are looking at the background bias assessment of our correlative markets. This is looking at the trend of our correlative markets, but not at anything that's going on the chart. Now, I want to move on a little bit. And I think there's one indicator I left out. It's really important. And I did. Let me put it in. I just built all of these templates, and I forgot one. Really important indicator, which I'll make sure is in the templates. Which obviously you're not just you don't get it. You get it because it's an absolute essential component to trading. Let me find the FX. All right, the reason I left it out is Sergio hasn't labeled it yet. But we can take it from any, because it's the same. Is the pivot indicator. Now the pivot indicator is what really tells you where the hidden buyers and the hidden sellers are, better than any sophisticated piece of stuff out there. And I want to describe our pivot indicator because it's like it really is like no other. And it's very, very critical to your trading. Man, if I take a trade into a pivot, it's a disaster. Now let me show you how it's calculated. Now in this particular instance, it doesn't really play a role in trading because see, price comes down here. This is a good example. Pivots are not created by the wick of a candle. Now that's not my decision. That's true Japanese candlestick dogma. The Japanese rice traders put no stock at all in the wicks. I mean, if you read the basic books on candlestick rules, they don't care what happens in this wick. All they care about is the candle body. So I would say 99% of pivot indicators, simply for ease of coding, just create a wick pivot. And that wick pivot is wildly inaccurate and can really hurt you on a trade, because sometimes this wick is all the way down here. So the pivot's going to be all the way down here when it should be at the candle body all the way up here. And when you think you have space to a trade, you really don't have any. And it's going to walk you into a loser. Now, this is where buyers turn the market. And I'm telling you, this is where they're sinning. We leverage pivots so much in our trading. First of all, a break of a pivot is simply not a price breach. And you can see this pivot to continue to trade. Now, if you took this trade, here's a pullback and continuation. It's not an entry, but you can see how it hits the pivot. This candle body squeezes through, the wick squeezes through, but why does the pivot keep tracing? You'll notice if you tried to take a trade into it, it would have bounced and stopped you out. It's because in order for a pivot to stop, to really be broken, you need 2/3 of the candle body to breach it. Again, most pivot indicators, because they simply are coded cheaply and easily, is if you get one tick below the pivot, they stop tracing, but the pivot's still there. Our pivot does an assessment of what percentage of the candle body has breached the pivot. And if 2/3 of the candle body doesn't breach it, it continues to trace because it's still there. And price bounces, even though another indicator, first of all, would have price down here. And you'd still get a loser. And make an assessment of a pivot break on any price move below. Here, the pivot stays, and we call this trading around the pivot. If you're going to take the trade short, there's your pivot breaker. 2/3 of the candle body closes below the pivot. Now, there's a great advantage to trading around the pivot, because if you take this entry, you stop out all the buyers, and there's always residual buyers in a pivot. And we get moves through a pivot that are like lightning bolts, because what happens? The buyers in this pivot get stopped out by the overwhelming amount of short traders here, and this thing gets propelled down. We get big moves on pivot breakers. Now, I don't have the futures market set up. I can show you some NQ trades that rocket through pivots. So this is a very, very important indicator. You trade around it, and when you get a break, you can take a trade. And that break is going to carry the trade through for you. So it's a tremendous advantage, actually, to take a trade on a pivot breaker. And at the end, I'm going to show you our whole trading methodology, and that's one of them. Now, I just want to mention briefly everything on this platform is optimized. We don't pop anything off of we don't take anything as being right. We question everything. This 50 is a 50 EMA of a 50 EMA put into a formula to give it the speed of an EMA and the smoothness of an SMA. This is a 15 EMA of a 15 EMA. And it's as fast as a 15 EMA, but it's much smoother. So it tracks price just as quickly, but it doesn't get jerked around like the EMA does. And if I'm not going to overlay it, take my word for it. Two candles, like this 3-candle move down, will take the EMA and push it in the opposite direction. This just flattens our EMA out just a little bit. And you see this candle breaker right here? Here's the pivot breaker right there. And look what happens. Boom, up it flies. Now you get one reversal candle, and that may have taken you out if you're to go out on a reversal. The point, though, is That break of the pivot propels the trade up. Because even though it's a small pivot right now, these small pivots contain just as many sellers in them as the big pivots. And I have seen, the dogma is you hit a pivot once, it's going to hold. You hit a pivot twice, it's going to hold. The third hit, it's going to break. Usually, I'm telling you, I've seen pivots hit 4, 5, 6, 7 times. I no longer even bother to assess how many times the pivot's been hit. Our rule is to trade around the pivot, and leverage the fact that on a break that's already been confirmed, you're going to carry with you all the counter trend traders in the pivot. So that's the other indicator I wanted to point out to you that is really exceedingly important. Now, I'm going to talk about the Laguerre. Now, these lines are multi-time frame assessments of momentum. This is a modified MTF, or multi-time frame Laguerre. And it's a tremendous tool. I'm not going to do the lecture where I put it up against the RSI, the stochastic, Williams percent K. This is the tool to track momentum. And just to give you a little brief background, and you may have heard this before, and I don't want to be redundant and boring, but the oscillator was created in 1957 solely to create divergent signals and take the counter trend trade. It was never created and meant or taught to be used as a trend tracking tool. It was created and meant to be used as a divergence tracking tool. But since 1957 and today, there's a tremendous difference in the market. In 1957, there was basically no institutional volume. What's present now in every market is upwards of 70 to 80% of volume is institutional volume. So if you try to trade divergence, you're trading against the direction of institutional money flow, essentially. And divergent signals are killer signals. They're going to wipe you out. Now, here's the thing, and this is why you can't trade divergence. When you see a divergent signal, some work and some don't. But can you make an assessment of which ones are likely to work and which ones are likely to fail? And the answer is absolutely not. And if you can't make a risk assessment associated with the entry has no value. If you can't pick the low risk divergent signals because they just don't exist, you can't use them. And my paradigm in the market is there is no such thing as a top anymore. The tops are created when the institutional traders step aside. And there's no such thing as a bottom. I mean, I trade the NQ in the morning at 9:30. That NQ can freaking go down 40, 50 points as long as the institutional traders continue to push it down. So there's really no mathematically quantifiable top or bottom based on an oscillator. It's all you can do is track the direction of money flow and go with it. And if you try to counter trend trade a big move, I'll tell you, I can't show it to you, but you can see it right here. Look at this move up. What are these traders doing here? Why are they going short? Why are these traders going short? Why are they going short? Why is this guy short? Well, you know what? He's trading divergence, a MACD divergence. He's trading oscillator divergence. They're calling tops here. They're calling reversals. They're saying that's as far as the market's going to go. I'm going to call it and it's going to go straight down. I'm going to call it and the market's going to go straight down. We wouldn't even think of that. We're not looking at divergence signals. And there's still traders today that look at divergence. And I'm telling you, I mean, a stock can go up in overbought territory for 3 months straight. I mean, if you try to fade based on divergence, you're really going to get crushed. And just like the traders in this small move, you're going to get crushed on a swing trade or a long-term trade. So let me just get back to the Laguerre. We need to make an assessment of momentum. And let me just give you quickly how important momentum is. And the reason it's important is momentum, and I'm purposely not doing this in slides. This would be 100 slides. And I didn't want to bore you to death. I talked with Rory about it. He has a new addition to the family, his beautiful daughter, Marilee. Here's her picture. I don't normally do this, but I'm going to put it up here anyway. If I can drag it across, hang on one second. It won't come. Hang on. I can't drag it. I don't know what happened. But, and I thought it would be more interesting if I did the webinar off the charts and you actually saw how price behaved and how traders behaved and how they're thinking. So I have to do a little bit of writing. And the thing about momentum is this. What does momentum tell you? Momentum tells you price goes up here and price goes up here. They start at the same point and they end at exactly the same point. Now, is the momentum associated with these two moves up identical? And the answer is absolutely not. The momentum is associated with the rate of acceleration of the move up. It's like, look at this as a race car. If this car is racing up the track and it starts at 100 miles an hour, and as it starts to go up, it's now 110, it's now 120, it's now 130, it's now 140, it's now 150 miles an hour. Momentum here is increasing. Here's you got increased momentum. But if this movement up in price is at 100 miles an hour all the way up, momentum is flat. And the theory is that momentum leads price. When on this move up, this is more likely at some point to fade than this, as long as momentum is increasing and price is continuing to accelerate up. What's the likelihood that price is going to turn? You know what the likelihood is? It's 0. And there's my big O. That's why momentum is so important to assess. As long as momentum is increasing, you know that price is continuing to accelerate in whatever direction it's moving. When momentum is flat, price could turn at any time because there's no acceleration of price to the upside or to the downside. So momentum is a great trend tracking tool in today's market, where institutional money rules, and we have to trade in the direction of institutional money. Now, stochastic, RSI, Williams percent K, those were oscillator created for divergence signals. We've modified the Laguerre, because the Laguerre is the most modifiable of all the oscillators. It has a gamma and it has multiple filters for stability and speed. And it's not going to almost ever create divergence. What it's going to do is when it breaks above Here's the 20 line. It's going to give you an up arrow right here. Then when it locks long, it's going to give you this green line. And what is this green line telling us? It's telling us the price is continuing to accelerate to the upside. And as long as this acceleration continues, we want to go long. We don't want to try to counter trend trade the market. So this is another strong independent variable. You can take a pullback in continuation at any point when the Laguerre is locked long, and the quant line is telling you that money is pouring into the market, and the background bias is green, and the 50 is up, and the 15 is up. These are all low risk continuation trades. So that's how we use our program. Now, the reason I don't want to spend too much time is that there's two other components to the system that we're going to use. The other is we want to cherry pick the best trades. You can look. I looked at 8 markets, and we can look at it. We can open up another market. We'll open up the pound dollar, and let's just look at a move. Now I'm looking for the best moves, and well, there are multiple moves in here that I'm not even looking at. You know, pullbacks. You can see it gets choppy in here, but I'm telling you, you're not going to get caught in chop. And you see this move up here. The Laguerre is heading down. It's not a tradable long. And here is your gorgeous trade. Now you can't take this. This is a tradable short right here. You don't have the strongest background, and you don't have both dots. But you've got your slow dot, and you want a dot confirmation. You've got order flow, stochastic, and momentum. The candle's haloed. It's not the strongest background bias. Now you don't have the quant. You can't take the trade. I'm sorry, you can't. What you have to do is wait for this pullback here and take the trade here. There's your entry, and you get a huge move down. Now we're assuming that the halo in real time was magenta. Here's your next move down, pullback and continuation. But you assume this is riskier because you've moved significantly off the 50. Now, what I want to show you is what you can do, and you get this as part of the system, is that you're going to get the scanner. And the scanner is going to shoot you an alert on the right edge when all the things that I've told you are present on the chart. So what you can do is you can keep the system closed. You don't have to track price when it's in a very risky area. And here's the only other thing I want to add. I want to show you, I mean, if you can't quantify mathematically what you're talking about conceptually, then it's just a bunch of nonsense. I mean, people can blabber on all day, but the sensitivity of a trade, which is your ability to take true positives, the specificity, can't spell, F-I-C, of a trade is your ability to avoid losers. So here's your ability to get true positives. Here's your ability to avoid false positives and latch on to true negatives. Has to be multiplied by this key number, prevalence. And when is there the highest prevalence of taking a winner? The highest prevalence is when the market's in a trend. So when is the market in a trend? Because that ultimately, sensitivity over specificity times prevalence is equal to your win percentage. Or positive predictive value of the trade. This is the only number that matters, is what percentage of your trades are losers and what percentage of your trades are winners. This number. I didn't mean to make it bigger, just wanted to make that darker. So if you take a trade always when the prevalence of a winner is most likely to occur, which is in a trend, and it's not always easy to determine when there's a trend, but with this system it is. It will make your ability, the sensitivity of getting a true positive greater, and the ability to avoid a false positive or lack onto a true negative easier. So you can get winners better and avoid losers easier if you just stay, if you observe the rules regarding risk and only trade the trend. And this is what this dashboard is created to do. When the alert occurs, it's going to occur when background bias is pink, when the quant line is in your direction, when the 15 is down, when the 50 is down, when the Laguerre is locked short. That's when you pop open your chart. And you can put these on as many Forex pairs as you want. I mean, if you can handle it, you can put them on 20. The only problem you're going to have is you're going to get too many signals. I mean, and that's what usually happens is they alert in clusters, and it shows you the rotation of money into certain Forex pairs and out of others. So if you can overcome the fact that if you trade 8, you may get 3 alerts at the same time, then it's going to be great. Now, the alert doesn't tell you there's a trade. It tells you there's a potential low-risk entry coming. There's no system that can give you a really accurate entry. We're working on it on the auto. But right here is where you're going to get a signal. And there's the sweet spot of the market. Red, locked short, magenta, dual dots, 50 down, 15 down. Almost any trade you take in here is going to work. Now, this is a wick. You take the pullback and the continuation, and you've got yourself a nice trade. This is all it's doing, but it's doing something that's very powerful. I'm just going to scale it just so we get an idea of how far it goes. That's a 30 pip move from entry to maximum excursion. I'm not saying you're going to get all 30 pips. How much of this you get is based upon your risk tolerance. I recommend you set targets. You set a first target, you trade 3 lots, you trade a first target, a second target, and a third target. We'll give you we're going to give you a recommended ATM based on the volatility of the instrument. And the exit is always going to be a reversal candle. And this is trading 5-2-10. So you're going to take on this 13 pips of risk. That's going to give you a reversal and take you out of the trade. You see this big wick didn't take you out. You're still running the trade all the way to the bottom. You can exit on the Laguerre arrow if you want, or on the first up candle. And you're going to get 90% of this move. It's a very lucrative move. And it's a very low risk move. And this is what the scanner is going to constantly show you. You're only going to see it on pink. You're going to see it briefly here. You open the chart, you see it. You may have to watch it a couple of seconds. It's not going to give you an entry. You're going to see it here. Actually, it's not going to give it here because you don't have dual dots. It's going to give it to you here. Nope, it's not going to give it to you here either. You don't have the Laguerre lock red. It's only going to give it to you on the real choice spots right in here. You only want to cherry pick the spots that are just the greatest trades right here. You're going to get the trade if this is outlined in magenta. And you just take the pullback and continuation. Here, the same. And you're going to get that on 8 markets or 10 markets or 12 markets. So you don't need to look at this trade or this market when it's plopping around here like this. It's a waste of time. You're going to be always focusing on markets where the potential for a low risk, high reward entry is there. And that's the best I think you can do, is only focus on the best trades. Now, if I told you you're not going to get losers, you should just click out. You're going to pick up losers, but your losers are going to be rare and are just going to be rare. Most of these trades, 80% or more, taken with all of this in your direction, are going to work for you. So you just stick with the lowest risk trades. Now, that's not all. Now, there's going to be two different. Now, this is going to come with the platform. You get all of this, and I'll answer any questions. And there may be some things I missed. I think I was pretty comprehensive in looking at everything. But I'm going to have to switch this to the futures market in order to show you this. But I want to explain it to you first. We have the only tool that can shave pips off an entry. Now, the market is not going to give you money without you taking risk. I'm going to drop the scanners. I want to explain this to you. Now, if you want this tool, it's going to be a little bit more money for the platform. If you trade futures, you enter at the price. There's no bid and there's no ask. There's just a price. So let's say you want to go long right here. And you set this tool to buy on an up close. The tool, the NDT trade execution platform, will execute the trade automatically, one tick above the close of the up candle. And you can get that price because it's being offered to you. Now, occasionally you're going to get slippage. That's a market dependent variable and one that we can't control. If the NASDAQ is moving at 10,000 miles an hour, you may sustain some slippage, but most of the time you get your entry because you don't have to rush in and execute it. The NDT does it for you. But on the Forex, you can't get the price. You can only get the bid or the ask. And the spread is what's going to be taken from you. So let's say you want to take a long trade and you don't want to give up 2 pips on the spread. What you can do is you can set the NDT to trigger at the price you're going to get. Let's say there's a 2 pip spread. You're going to get in 2 pips above the price you want. That's what you're going to pay for the trade. So your optimal entry, you're already given up 2 pips. But with this system, and it's the only one I've ever seen that can do it, and this is up to you if you want to set it. This will be your trigger. It won't be your entry. You can set it to entry on a 1 pip pullback. So you can take a pip back and then take the move up. You could even set it for a 2 pip pullback. Now, on some trades, you're going to lose the trade because I want to tell you right up front, if the market was going to give you that pip every time, it would be unbelievable. We'd all be setting a 1 pip pullback and getting a pip back from the spread. If the spread was only a pip in a really heavy volume market, we'd be actually getting in at price and not paying anything for the bid-ask spread. But remember, there's always the risk that you won't get executed and filled on that 1 pip pullback. There's always a little bit of risk if you try to Schneider the market out of some money. They're not going to let you do that without some associated risk. Now, I'll just show you the tool. I don't have it formatted here, but the It's really easy to show you on the futures platform, and it works exactly the same. So I'm just going to open the futures platform up real quickly. It's going to come right up. There it is. And I'm just going to go to strategies. Let me bring over the control center. Now we've been waiting on this tool for our patent for 2 years. It's really hard to get a patent right now on software. Let me go to strategies, but it does have a patent pending. And let me bring up the tool. I'm sure you've seen it if you trade in the room. Now here it is. Now for the NQ, I'm going to connect it. It's now connected to the NQ. And here's crude. And I'm going to connect it. Now this is how you would trade. You wouldn't trade off the chart. You wouldn't trade off the dome. You trade off of here. Now, if you wanted to buy it up close, and you're going to see it execute on the chart. You know what it is? I don't have any data feed. Hang on one second. Let me close this. And I have, I have the FXCM data feed. Let me disconnect that. That's why it won't execute a futures trade on an FXCM data feed. So the CQG data feed is coming up, and I'll show you exactly what I'm talking about. It's a tremendously advantageous. It gives you tremendous advantage in a really fast-moving market. A 1 pip pullback is very common, and you're going to get filled, I would say, in 80% plus of your trades, but 20% of them are going to leave you in the dust. But if you want that 1 pip, that's the price you're going to pay. Now, hang on 1 second, the whole thing's loading. I didn't realize I disconnected the CQG. And I'm going to show you exactly how it works. And we've discounted this immensely. Never sold it this cheap before. We want to disconnect, yes. I think. I'll have to reconnect that. Hold on 1 second. It's loading. Now, of course, it's loading slow. Then I'm going to answer any questions that you have. I mean, look, listen, it's a lot of information. I'm explaining to you an entire platform that's really complex in its inception, but not complex to trade. I think it's very intuitive and very easy. Now you're going to be in the live trading room with me. I talked to a lot of traders over the weekend who sent me audio files and called me on the phone. They're always giving me good advice. We have a huge number of traders in the room, and a lot of them make a lot more money than I do, and that's why I listen to them. Now I'm just getting the wheel of death here. Just give it another minute or two. Anytime I'm doing this, I always get the death wheel, and I may just drop the platform and just reboot it, which is what I'm going to do. Let me just start it from scratch. It'll load a lot faster. I didn't save anything. Oh, here, let me drag this across. Oh, I'll be darned, it won't drag. It's going to show you Rory's baby. Right, hang on a second here. Just wait for it to load. Control center's up. So we're close. And it's loading perfectly. Ninja's quirky. Sometimes it collapses, gives you an ulcer. When you're, when you're switching platforms and switching data feeds, it can be a real pain. But it's loading. I got the NQ loading, got all the instruments loading. Now I'm very seriously considering opening up a Forex room. I had one about a year and a half ago, but I got too tired, and I just had to close it because I was trading the Forex at 2 a.m., then trading the futures at 9 a.m. And in between, at the time, my son was a lot younger. I'm a single dad, and I had to get up and make him scrambled eggs and his bacon and scrambled eggs and toast and all that stuff. He's more independent now, and I could probably get more sleep, and I may actually do it. We traded the Forex very profitably using the scanner, and we had a 1 pip pullback programmed, and it worked real well. We didn't get every trade, but the trades we got, we had a very high win percentage, and we did extremely well. But I had to close it, and it was only open a few months, and I had a lot of traders in the room. Can't remember how many, but I went until their subscription ran out, and then I just had to do it out of concern for my own physical health. And but I think because I had to get up again at 6 a.m. To make my son breakfast. Now I think I can skip his breakfast, which I've been doing more often, and he's just on his own for breakfast, and that will give me a big leg up because I can sleep. If the room's open from 2 a.m. to 4 a.m., I can sleep from 4 a.m. to like 5, 6, 7, like 8 a.m. Just 4 hours plus the hours before. I could probably do okay. So it'll open in a second. It's connected and loading. I didn't think it would take this long. I'm sorry, but I want to show you the NDT tool because it's an option for you to get. And I think it's really advantageous. I personally would not trade without it. And I'm not an advocate of software that you don't need. This is a superlative tool. In a fast-moving market, it's tremendously advantageous. And you're going to get 80% of your 1 pip pullbacks. In 1 sec. Just about there. And I apologize for this. And thank you guys for hanging in there. And everyone's staying. All right, just hang in. Could have done it the easy way if I just would have remembered the data feeds. I'm sorry. I can't even show you any pictures. In 1 sec. Here we go. All right, here we go. Everything's loading. It's really slow because it's Sunday night. I'm telling you, it loads slowest on Sunday night. Okay, let's go and let me put up the NDT now. We're there. Just about finished. I don't really care about price. I just want to, we still have one or two charts that are still loading. Unfortunately, I have so many charts up here that a couple of additional charts are not loaded yet. Let me go to strategies. And really thanks everyone for being patient here. Let me bring up the NDTs. So I have stocks that are loading. I have the Qs up, I have the SPY up, and they're still sitting there loading off of Kinetic. I mean, that's the problem. I may just click them out and get rid of them. I'm going to click them out, I think. One's gone. And let me click the other one out. I'll just get rid of the chart. So I don't need them. Oh, nope. I wish I could serve you some hors d'oeuvres. I'm sorry. All right, got it. And we're good to go. Okay. Here we go. I'm still getting a non-response, only I have all the charts up. Don't know why. And here's my NinjaTrader Dome. Still getting a non-response. I'm just waiting for it. All right, let's see if that's it. Oh, I see what the problem is. I see it. All right. All right. Let me take this out and bring up one dome. Just don't know why this is happening. Anytime other than doing a webinar, this thing works in 35 seconds. All right. Let me get rid of this check. And I see what the problem is. You have contract rollover, and the NQ is on both the 6 and the 3 contract date, and they're conflicting. And the contract date on March needs to be deleted, and that's what's causing this problem here. So let me see if I can delete this month. All right, let me see if this will come up. That's the problem. Oh my gosh. I may have, well, that looked pretty definitive. You see, it's trying to figure out what to do. And I think here's what I'm going to do. Let me roll this chart if I can to June. And if I can, I think that'll solve the problem. That's why that's why the date out top is skewed. Let's see if I can get that done. Here we go. NQ6. I don't know why it loaded with the back month. I switched it and saved it. All right, here we go. Now it's going to load the June month, and I think we'll be fine. There it goes. Just one thing against another. The NDT is set for June, so it should come right up as soon as the chart appears. And again, thank you. The number in the rooms is going up; it's not going down, and I really, really appreciate you giving me this. If you haven't seen this tool, I think it's worth taking a look at. No matter what you trade, actually, I think it's worth looking at. Let me just give this chart a minute to load. See, if the master was here, Sergio, he'd have this thing fixed in a second. But I've got both my data feeds up and running, and I just don't know why I'm having problems with it. But I have a feeling it's contract rollover. We should still be able to get March data. Contract still exists, and I'm sure there's going to be some volume on the March contract. So I don't know why, but I think the problem is that both NQ contracts are in there at the same time, and that's the problem. And you can't have them both. All right, but hopefully this is going to respond now. Please. All right. I think we're in good shape now. Let's get it to load. I had other NQ charts. They're all on 6 now. To load. If not, I'm gonna build my own chart and put it on myself. All right, let me give it 60 seconds. Oh my gosh. This is going to be great market replay. All right. We'll have to edit this out. All right, great. The platform just collapsed. I'm going to try one more time. It should come right up. All right, it's already been booted. Here it comes. If it doesn't load right up, I'm just going to have to show you on Paint, which is not going to be as powerful as showing you on a live chart. But if it doesn't boot immediately, I'll just have to finish out that way. I'm really sorry. I don't know why it's giving me all these problems. I truly don't. I mean, this thing should load easy, and I don't get it. The Forex loaded in 2 seconds, and it's got 8 markets on it. Let me start to describe it for you while it's loading. I'm going to do it right here, and this will load right behind you. What you're going to have is this tool. and it's got a number of buttons. One of them is, this is so much more complicated than showing you, but it's better than nothing. It's buying up close. And the other is and there are many others, is sell a down close. Now, if you buy an up close, the tool's going to trigger the exact price one tick above the close. If you sell a down close, it's going to get you in one tick above the close to the downside. And that's on futures. Now, if you're trading Forex or you're trading stocks, and I wish I could show you, and hopefully I'm going to be able to do that, what it's going to do, and you're going to see this on your dome, is it's going to give you a trigger at the price you get, which is going to be the spread. And then and then you can, on a long trade, it's going to only execute you on a one tick pullback. And then if you want, you can use it as the tool that you get to, and it's loading. I mean, I got the platform open and all the instruments are flying in there. Hopefully it'll load okay. And it's gonna execute on the one tick pullback, and that's where you're gonna be in. And if the trade just flies up in the air, you won't get it. Now you can also use it as a way to trail the trade, because when you're in the trade on a long trade, you can press the button that says sell a down close, and you're going to get taken out on the first reversal automatically. If you're in a short trade, you can hit the button that says sell an up close, and the first reversal to the upside is going to take you right out of the trade. So now if you're trading time or tick on the Forex, you don't know where the candle's going to close. You have to wait until the last second. You got to rush in when the tick number or the time elapses, and you got to get the best price that you can. If you simply hit buy and up close at the close of the candle on time, it's going to try to execute your trade one tick above the close on the Forex. It's going to try to get you in at price, but it won't be able to. You're going to get filled at the bid-ask spread, wherever that is, and you can set, if you want, it to trigger there and get the pullback. Now, this whole execution process cannot be done. I mean, a human being cannot do this. To get the trigger at the price, get you in the trade. The trade's going to say, it won't say filled, it's going to say triggered. And if you get the pullback that you're looking for, it's then going to say filled. And you can't do that manually. And you're going to be sailing, instead of at a 2 pip spread, at a 1 pip spread. If the initial pip spread was 1, you're going to be actually in at price. And again, it is going to be dependent on the market. The market's gives you enough wiggle room, you're going to get your fill. If the market's just on a rocket ship tear up, you won't get filled and you're going to lose the trade. But from my experience, you're going to get 80%, and 20% of the trades are going to skip past you. And you have to be able to put up with that in order to gain that pip on the trade. Now, so I'm going to start to answer questions. And let me show you the offer that we have. I think it's a very, very good one. And let me drop paint and let me show you the offer. And then I'll go over any questions while I wait for this thing to load. Hang on 1 second here. Let me find the offer. I just wrote it, so I know it's here. I just have to find it. Here it is. Now, the whole system with the dashboard. Now, here comes the platform. With the dashboard, hold on a second. I may actually get to show it to you live. It's coming up. Now it's coming up NQ3, but that's okay if I just open up the NQ3 dashboard. So I'll show you the whole system, including the dashboard, is $13.99, and that's lifetime license, free upgrades for life, and the website is $29.99. Now this is the cheapest package we've ever had. It's the whole system plus the dashboard. Now the NDT is normally $1,500. Occasionally we discount it to $750, but we're going to give you all of it for $17.99, and it's normally $49.99. We're only going to sell 5 of those because there's a really enormous discount on the NDT, which gives you that configurability to take these trades. Now, on a fast trade, when the Forex is moving up really fast, and you don't have time to place the trade, and you just hit that button, buy an up close, you're going to get into the trade. On the NASDAQ, it's invaluable. So you have 5 of those packages. So let me see. Now, Rory's on the phone at 786-713-5276 if you want to talk to him. And let me just, this is not loading yet, and it's still a problem. So let me answer questions, and I don't know why it's doing this. I truly don't. And I'm just going to let Sergio work it out in the morning. Let me answer questions. I'm sure there are a few because this is a lot of stuff. And let me go over it. Okay, guys. Good. Hey, John. Hey, John. Oh, my pleasure, Ed. Thank you, David. David said I'm one of the best teachers he's ever worked with. And David, I'm flattered because you're a really smart guy. Hey, Robert, are the Unorenco sizes on your charts? That we're going to give you all those inputs, Robert. On the templates that we give you for Forex, the 8, the 13, and other traders may not know what I'm talking about, but all the inputs are going to be preset for you. Like, I don't have the Forex up, but some Forex trade with an 8, some trade with a 13, some trade with a 21. We've already figured out the best input, set it, and so all we'll do is send you the templates, and that will set all those for you. So the fib and the background bias, the quant and the background, everything else, everything will be preset for you. I mean, if you want those numbers, we'll give them to you, but they're going to be in the template. So you don't have to worry. And I created 15 Forex templates. Now I have to go back and do them all over again because I forgot the pivot indicator. So I'm going to do, actually, what I'm going to do is I'll probably do them tonight. Okay. Okay, Ricardo, that's a great question. The reason is why the candles turn to black and to blue is because this is the 3-line indicator assessing order flow, stochastic, and momentum. It's 3 parameters done on a multi-time frame basis. And here's the problem that happens. On a live chart, Ninja is comparing the candle you're looking at with the previous candle. And that determines the background, the color of the candle halo. When you close and open, the platform isn't really tailored for this kind of assessment. So it jumps and compares the candle you're looking at with the future candle. Now that candle didn't exist when you were trading. So on a live chart, it's looking at the candle and the previous candle. When you close and reopen, it's looking at the candle and the future candle, which wasn't there. We can't overcome it because that's the way that the core system of Ninjas is coded, and it's a flaw. Now, I don't want to get into a fight with them because we've talked to their coders and they won't admit it. But Sergio is real brilliant, and he's looked into the Ninja system, and that's what it's doing. So that's why the outline of the candle is inaccurate on a retrospective analysis. Now, if you want the color to be always accurate, and I do this sometimes, I leave Ninja open for a week. And if you leave it open, it will never change. Nothing ever repaints. Now, the arrows are never going to change. The entry signals are not. I didn't even go over this entry signal. It's a terrific entry signal. It's a multi-time frame entry signal that's very accurate. You can see it triggers a long trade here. That's the problem. So you can't really take to heart the color of the candle halo on a background analysis if you've closed and reopened. I'm sorry about that, but that's just the way the platform is. You can just make an estimate or a guesstimate. The quant line gets pushed a candle or two to the right. The Laguerre gets pushed a candle or two to the right because they're all multi-time frame assessments. And it doesn't know how to handle it. That's the reason. Okay. This is the system I'll be using in the morning, Steve. I showed you everything I'm going to use. I mean, that is the full system with the NDT. I have nothing. That's it. I'm working on it, Stephen. I don't know for sure. It's a scary commitment because once I make it, I don't want to back off. So once I start a 2 a.m. room, I want to be able to do it at least a year, ongoing at least. So I want to see how things go. I'm going to make the decision in the next week or two. I don't want to promise. I always like to under-promise and over-deliver, and not over-promise and under-deliver. I'm not going to make any commitment, but I'm seriously considering it. I mean, that's all I could say right now. Price is always going to revert to the mean, Steve. You are completely correct. Only it's not going to snap back to the mean until after institutional traders step aside. If they've pushed it 2 standard deviations above the mean, it will snap back to the mean faster. If they push it 1 standard deviation above the mean, it will still revert to the mean. If they push it out 3 standard deviations, the thing's going to come back with force. The only problem is being able to predict when they're going to step aside. And if you trade the NQ or if you trade the DAX, they can sit and push the market up or down for honestly forever. And if you try to anticipate when they're going to step aside, that's where you're going to get hurt. And we have this volume indicator here, which I also didn't go over, which shows contracts per minute. Sometimes they take a breather. You see volume fall off and the price will retrace a little, and then they just come back with a fury and just continue to push it up again. That's why we just don't counter trend trade. And I'm telling you from the bottom of my heart and from everything I've seen, any system that tells you they can call a top or a bottom is baloney. The tops and the bottoms cannot be mathematically calculated by any system because it's all based on institutional money, and you never know how far they're going to take a market. So you cannot call a top or a bottom based on any mathematical derivation. It's an unknown variable. All you can do is determine risk in taking a trade in the trend. That's it. That's enough, though, to get you incredibly profitable. You don't need to go into these nebulous zones of where's the market going to turn, where's the market going to reverse, When is it going to revert to the mean? Why go into those areas? You want to stay in the sweet spot of the market, trading close to the mean, taking a multi-time frame alignment trend to the upside in the direction of institutional money. I mean, we know those trades work. So don't extend yourself out into areas where we just can't understand market movement anymore. Unlike George Miller or George Lane in 1957, because of institutional money. They've created a completely different market environment. And it's only going to get worse because the volume that they put into the market is going to become more and more intrusive. They're going to dominate the market as in 5 years from now, 10 years from now, it's going to be even worse. And if we don't trade in their direction, we're going to go bankrupt faster. And I don't believe there's any other way to trade. That is the only way you can make money. And you can do it very reliably and very safely. Hey, good afternoon. Hey, it's my friend Eddie. How you doing, Eddie? How do you handle the pullbacks that get you out of a trade? But it keeps moving up. Listen, Stephen, the way we have the ATM, the wicks don't take you out. A reversal candle takes you out. Now, if for some reason you get taken out, you go right back in. But you really should only be taken out on a reversal. You're taking 13 pips of risk on most of these trades, some of them less. On some of them, you're only taking 11 pips of risk. But if you try to set your stop less than a reversal candle, the natural harmonic of the market is going to yank you out of the trade, and the candle will never reverse, and it will go up 25 or 30 or 40 pips. Because there's nothing based on market structure and price action that's told you to exit. And the 2 or 3 times I've tried to pull my trade out on my assumption that the market was going to turn and take me out before it did formally, I swear to God, the market just continued up and I lost a winner. I booked a loser, a partial loser, and the market just continued to roll. So I'll take the loser on a reversal, and if it's still a great trade, I'll re-enter on the next candle and try to make my money right back. That's the safest way to trade. Prevalence, Heinz. Prevalence is simply the likelihood that a true positive is positive and the likelihood that a true negative is a negative. I didn't want to go into the mathematics of prevalence. Haron left, but this is just as good on currency futures. Heinz, that's what prevalence is. And I can give you 2 seconds on prevalence, because you can't define something mathematically as no value. And let me give you a great example on prevalence. I'm not going to go into the math of it, but let me show you what I mean by prevalence. And let me just bring up paint really quickly, because this is very important. If you want to understand how to be a successful trader, you have to know the math behind it. And if you don't know it, you're going to have a problem with it. I'm not saving that. And let me give you an example. Let's say you're going to do you're going to evaluate a test for the prevalence, for the presence of influenza virus. Okay? Now, the test has an intrinsic sensitivity and specificity, but the positive predictive value is variable depending on prevalence. And here's the example. For trading, it's the trend, but here's how you do prevalence here. You do the test here, And on this test, you do it on 100 9-year-olds in daycare. And in this case, you do it on 100 monks in a monastery. I spelled it wrong. EST, in a monastery in Tibet. Now, if you get a positive test based on prevalence, what is the likelihood that that positive test is real here? It's very likely real. It's very unlikely to be a false positive because of the cohort. If you get a positive test here, you got to question its validity. And this is the same thing that happens in trading. If you take a trade in a trend, it's very likely to give you a winner. If you take a trade in chop, you may still get a winner, but the likelihood of getting one is very small. And this is really how it relates to prevalence. Prevalence changes the value of sensitivity and specificity, and the value of a positive result is skewed. So these 100 monks in a monastery should all test negative. And a positive test would be very unlikely. If you got one, you have to question it. If you get a positive test here, it's very likely going to work. That's prevalence. And that's how important it is to trading. You stay in the trend, and whatever intrinsic sensitivity and specificity there are based on the quant line, the Laguerre, the correlative markets, order flow, and all of that is going to be significantly more powerful. There's the mathematics behind prevalence. And it can be mathematically quantified and defined. Correct, Steve. You're getting a stop limit order that triggers at the price the market will offer you and executes on a one-tick pullback. FXCMs are great, Steve. It's really good. Well, you're right, Ed. I mean, software copyrights have just ground to a halt. I mean, we have that thing pending. I mean, that's Leo and I for over 2 years. And we've had to submit it for 2 revisions. It's a really difficult process. But the patent pending on the tool, if I can bring it up, is real. Now, let me see if I can really brief. I'm not even going to, at this point, I'm just not going to even try because we're so far over. I know, Justin, it's the new June contract, and I did have the June in. I don't know what that March is doing there. If you're in the live trading room on Friday, before I closed the system, I rotated all the contracts to June. So I don't know what they're doing sitting there in March. I don't even have March on my in my instrument manager. So I don't know how it came back. I'll let Sergio work it out. The release date for NT8 Hines should be this week. Michael, it doesn't work on TradeStation. I'm sorry. It's NT7, NT8. Yes, Sierra is. I like Sierra, and we're almost on Sierra. We've done multiple upgrades in the software, Forex. A lot of upgrades and a lot of upgrades in the scanner. But we'll give you credit for the scanner that you purchased. I mean, you purchased what is now antiquated tool, but we will upgrade you and we'll give you credit for that. I just want you to know that. Screen all blue. I'm not sure. I hope the screen's not all blue now, Steve. I know that, Robert. That's probably the problem. and I don't know why it's doing it. And right now, I'm not, I've tried to resolve it, and we're just running so far over time that I'm just going to have to describe it. You saw the tool come up briefly. Right now, I'm just going to do it on my own because it may take me 10 or 15 minutes. But I know the problem is that March, and I have no March in my instrument manager. I don't know what it's doing there. That's why it's locking it up. And that's, sometimes the beauty of NT7. I like NT8. We're going to be moving to NT8 very, very shortly. Stephen, honestly, you're asking me how much I averaged at 2 to 4 a.m. in the morning. Stephen, I don't remember. I have all the data on a spreadsheet. I just don't. We made between $400 and $600 a session, but we took drawdown days. I mean, it's not like I traded with perfection, but there were traders in the room that did far better than me, and the signals were excellent. And I only traded 2 lots on purpose to keep the number small. I wanted to gear the room for traders with a tiny, tiny account. If I would have traded 5 lots or 6 lots, that number would be in the thousands. It's just not my interest. No, it's my problem, Stephen. No, Steve, I mean, it should work really. You need the full Ninja. No, you don't need the full Ninja for the NDT. The NDT doesn't even need, you need Ninja, correct. You do need the Ninja. I mean, it's an execution tool on the Ninja platform. Oh, you're just seeing a blue screen right now. Let me reshoot it. Hang on one second. Hang on. Here we go. Hold on. I think this thing is blowing out my whole computer because I'm losing the ability to let me get the screen refocused. All right, what I'm going to do is I'm going to close Ninja because it's blowing up my entire computer. Of course, it always happens during a webinar, but I'd rather project a slide than just a blue screen. Hold on one second. And it's the contract problem. I don't know why it's there. I truly do not. All right, now it should release it at least and give me the ability to reshoot the screen. At least put up something. Hold on. Let me see if you can. Let me see if you can see that. If you can't, I'm not going to toy with it because here we go. I got it. Now, at least that's the offer. I mean, it just released my Ninja because my screen because I closed Ninja Trader. Okay. Now I haven't, Steve. I have a lot of RAM on my computer. Something's crazy with Ninja Trader. Right. No, I have AT&T, Michael. We have a good data feed. We really good. Well, the scanners don't require much much RAM, Ricardo. You should be able to run 25 scanners on your platform easy. I think it was the contract date. When I had 8 charts open and the scanners open, it ran fine. When I tried to switch to futures and the contract date was March and there's no March in my instrument manager, I think that's what blew the platform. Like the ES, one energy market and one commodity. Well, you know what, David? You know what? I listened to your voice email and I really appreciated it. I think in the morning I'm going to go back to the NQ and crude. What I did was I did market replay. Now, market replay doesn't give us a complete platform, but I looked at the speed of the 3 instruments, and I think it's too much for me to trade. And I agree with you, David. I just have to take the perfect trades, the dual quants, all the trades. I mean, I looked at all my losers last week, Now, if I didn't drag the stop, we had $1,400 locked in. But even with that, we could have made $2,800 if I just took the most conservative trades. Really, the dual quants, those are the trades I'm going to stick with. And on the NQ, even though you're going to take a loser here and there, they're pretty excellent. And we got great NQ winners. So I think that's how we're going to do what we're going to do. That's all I'm going to look, Greg. That's my goal. I know NQ is June. Thank you. Thank you so much. Ed says we are patient because the software is unique and we've never seen anything like it before. Thank you much. Hi from London, Pri. Yes, they were live charts, Pri. They were live. That was a live data feed. You know, John, I just couldn't get it open, or I would have shown you the NDT executing, no problem. I did. Well, you know what? That would have been an idea, Leon. I just didn't think of it. That's a great idea. I just should have clicked out the NQ and opened up a new chart. You're completely correct. I could have done that. So it's too late. I'm not going to try to reprogram. You know, Greg, no, you can trade the Forex at 7 a.m., 8 a.m., 9 a.m. It's simply, from what I've noticed, from like around 2 o'clock in the morning to 4 o'clock in the morning, you get really great Forex moves. Now, you can trade the Forex anytime you like. You know, it's 24/7, 365. It's not a matter of the system being robust enough. It's a question of that there's, at certain points in the day, volume is really lousy. But at 2 a.m. in the morning, it's the only instrument to trade in the world. I mean, the Forex and the DAX are it. I mean, there's very few traders on the Nifty, and there's very few traders on the CAC. I mean, the French market and the German market don't really suck that much volume out of world volume at 2 o'clock in the morning. So most traders focus on the Forex. Volume is superlative. Volatility is great. And it doesn't mean you can't trade the Forex at 7 o'clock in the morning. You absolutely can. The thing is, I don't want to put up 2 futures markets in one Forex market, because you can go a day without a Forex trade. What I want to do is put up 8 Forex markets in a really volatile period of time and nail 3 or 4 trades quickly. I mean, that's my goal. And that's why I like that 2 a.m. time period. The European session opens, and now, since we sprung ahead, it's 3 a.m., not 2 a.m. We just went on Eastern daylight time, and we pushed ahead an hour. So now the 2 a.m. open has now become 3 a.m. So it's even more logistically difficult, but still possible for me to do. I did that, Michael. Don't worry about Ninja. I know. Thank you, Heinz. Thank you, Ford. Thank you so much. Oh, that's nice, John. John is telling me there's somebody else who incorporates the tick pullback into a pending order execution. Thank you, John. Yeah, you know what, Steve? I thought it'd be more powerful in the live charts, but NinjaTrader wouldn't cooperate with me. Thank you so much, John. The Forex templates are available now, Sathir. All I've got to do is put the pivot in. And we have 15 Forex templates. Give me 24 hours to add the pivot indicator, and all those Forex templates are perfect. Every single one of them. I have every input set perfectly per market. This week, it's all NDT for Sergio. I hope we'll release the NDT for NT8 at the end of the week. Yes, John, big time attention to news. We're going to go over before we trade the Forex Factory and look at anything. I mean, the millionaire Forex traders oftentimes just trade news, and they trade market conditions, weakening dollar, strengthening dollar. Now, sometimes it can be really wrong, but I've seen million-dollar Forex traders. They trade a lot of fundamentals. Interest rate hikes, things like that. Like right now, we are potentially heading into a recession because we have very, very low unemployment. And when unemployment is low, wages go up. And when wages go up, you start getting a problem with a recession. And if we get a recession, the value of the US dollar is going to fall. And there are traders that are banking on the weakening dollar, given the fact that even though we had less jobs created, our unemployment rate's down to 3.8, and employers are going to have to start paying higher wages. And in addition, if Trump builds that wall and keeps out illegal immigrants, they're not going to be around to take some of these low-paying jobs. Wages are really going to skyrocket, and that really is going to cause the economy in the United States to stagnate because of the costs associated with employment. I mean, these are all market trends that really savvy Forex traders leverage. But they're swing traders. They're not day traders. I mean, day traders, we want 25 pips. We can make it. We can make a 25 pip trade. It doesn't make any difference. In a huge uptrend, we're going to get nice pullbacks as long as we trend trade in the direction of our time frame. I hope that answers the question, John. No, all the Urenco settings are not the same, John. They're all in the templates I created. I optimized the Forex. I optimized the Urenco settings, the speed of the background bias, and the speed of the quant. Every template's been optimized for 15 Forex markets, and they're not all the same. They're 3 separate speeds. One is a 5-2-10, one is a 10-4-20, and one is a 4-2-8. I got them all in there, and they're really good speeds. No, I won't let that happen. That was very funny, Stephen. Pivot indicators. What are the settings tomorrow for the preset template you just mentioned? Paul, the pivot should be set with a sensitivity of 150. If the sensitivity is higher, you're going to get too many. And if the sensitivity is lower, you won't get enough. So if your sensitivity is 200, you'll get too few pivots. If the sensitivity is 50, you'll get too many. Everything's a trade-off. If you want to remember, every change in direction creates a pivot. I mean, every up candle in a downtrend is a pivot. Every down candle in an uptrend is a pivot. If you want to create a pivot at every single swing of the market, you will never get a trade. The 150 setting really gives you what I consider to be relevant pivots. I can tell you the same thing about moving averages. You can have a 50 period, a 49 period, a 48 period, a 47 period. What's the relevance of a 50 period? And I know the answer to that, but if I started going into it, it would drive everyone insane. But it has to do with quantum physics, I believe, and the fact that a 200, a 100, and a 50 are the most relevant moving averages based on the way that physics behaves. And I believe that the pivot sensitivity indicator of 150 gives you the most relevant pivots based on that same principle. And if you want me to give a talk on that, which is really kind of esoteric and not really particularly relevant to trading, if you just make the assumption that those are the best, I'll be happy to do that sometime, one Sunday. I'll tell you, with no offer, no software. I'll just give you an example. I'll give you examples of why we do what we do. I mean, I don't pick a 50 just because I like the 50. And the reason I don't have a 100 or a 200, which is irrelevant, there are reasons. Like there's nothing that I do or don't do because I feel like it or don't feel like it. And the biggest thing, and this is my final word that I'm going to say without answering a question, is that a lot of platforms you're going to see have oscillators with Renko bars. They do not work. An oscillator must have a wick. That's why we trade Unirenko or time or tick or range. They all have wicks because every oscillator, even a Laguerre, must compare 4 parameters: the open, high, low, close of every single candle. Now, a Unirenko doesn't create a wick on every candle, but we do. I just haven't gone into it. We have a hybrid Unirenko that creates a wick on every single candle. If you don't have wicks, you cannot trade with an oscillator. And there's $20,000 programs that use a Laguerre on Renko bricks, and it doesn't work. I'm not going to tell you what it is because I don't want to badmouth anybody. But you really have to know a little bit about what's going on if you really want to be, if you want to kick the tires on software. Hey, my pleasure, Ricardo. Like I said, Forex, it's just completely retooled. The parameters that we use for you to get a signal are different, and we will give you the upgrade. Remember, we always give you upgrades and add-ons. So you're going to get that upgrade, Forex. Just send us an email, and we will upgrade the scanner for you. It's a much better scanner. Ed writes, I agree that institutions now dominate all markets, and since you have whipped the public out of the market, they will only have other institutions to sell and buy back. We small traders need to follow them. That's exactly correct, Ed. All we can do is try to get in right behind them as quickly as possible. As soon as it's released, Heinz. Robert writes, I love my NDT. I would never trade without it. I love mine too, Robert. I never trade without it. Okay, Alan. Okay, take care, Gunn. Thank you, Ed. Okay, great. Thank you. Thank you, David. Appreciate it. Thank you, Eddie. Boy, I'm the best teacher in cyberspace. I wish I could crawl into cyberspace sometimes, but I'm in the real world. No, Eddie. The DAX trades about 80 to 90,000 contracts a session. It moves at 1,000 miles an hour. It's just an intrinsic part of the market. If you trade 3 contracts on the DAX, half the moves will give you significant slippage. That's my estimate. I love the DAX because it pays so much money. I mean, 12.5 euros a tick is outrageous to make. It's the same as the E-mini on 10 times the volatility, but slippage will give you a big headache. But you can give it a shot. But that's my warning. Okay, Prig. NQ trades will suit me just fine, purely because I'm a newbie and margin is relatively small, and the DAX, due to it being highly volatile, beast. Listen, I agree with you, Q. And the 3 line is an absolute killer when it comes to the DAX. I agree with you, Pri. I love the 3 line. I think the DAX is a great market, but visually for me, if we just stay conservative on the NQ, we can make it a cash cow. And that's what I'm going to do. I'm not going to overload myself. Thank you, John. Absolutely, John, you can add as many pairs as you like. If you want additional pairs, I will format them for you. I mean, they're going to be esoteric pairs because the 15 I formatted. I mean, I'm looking at the Aussie Kiwi, the Kiwi Aussie. I mean, all kinds of pairs that are not very commonly traded. But if you can find a pair that you want, I will create the template for you. Okay, John? That is my promise for you. Just give me like 3 or 4 days. Just give me 3 or 4 days, and I will have you the template out. Okay, Ricardo writes, Mark, you're 100% right. I would not trade without your NDT on any platform. If I might suggest, it would be to have an extra key to add one position with the same parameters, but trade management to be as if it was the first trade without Ninja Combine. I know what you're saying, the ability to add on, Ricardo, to add a contract. Let me tell you, once we get the patent on what we got, that's our idea. And the other idea we have is I want a button that will bring the stop to break even automatically. Unlike all thumbs, you saw what happened last week. I mean, I cost myself like, an entire trading day by not being able to move the stop to break even because I'm so freaking clumsy. If I just had a button that would shoot it to the entry price, it wouldn't have happened. So those are the two things we're looking to add. But if we add those now, we'll lose our patent pending. And that's one, the ability to add on using the NDT. And the other is to bring that to break even automatically. They're both really good ideas, Ricardo. And I know exactly what you're talking about. Very few traders add on in futures, but I know a few that trade our system that do, and they do really well. They add one contract on, and they usually make money off that added additional contract. I know exactly what you mean, Ricardo. No, John, it is critical. The arbitrage, the level of arbitrage is getting crazy, and it's all those big institutions. Okay, Michael. It's risky pre, but I think it's very achievable. 400 pounds a week. That's a very small amount of money. And really, all you need are 3 or 4 great trades a week to make that. On one contract, maybe 5 or 6 terrific trades, close to the 50, with everything in your favor. And if you're patient enough and have enough discipline, you'll make it. Hey, thank you guys. Thank you. I really appreciate it. Yeah, no, 480 a week. And she calls you Caterpillar. Well, Pre, I think you could make 4. I think it's easy. I just think what you need to do, the key is avoid the losers and take just the sweetest trades that you got. And if you have to let 4 winners go by to get your plum trade, don't care about them. Don't take anything with any associated risk. You take the 0 risk trades, tight to the 50, and you will make that. It just takes patience. And you know what it is? If there was a FOMO pill, fear of missing out, that's one of my problems. I'm scared I'll miss a big winner. And sometimes I'll jump the trade. If you can ablate that concern, you will make great money. The doorbell, Ricardo, we have not coded out yet. Sergio will. It drives me nuts. And you know what I do? I just set my volume to 0 to this. And I know you need to hear me, though, on your end. So it's a problem. And we're going to code it out very shortly. I apologize for that doorbell. Only I can't get rid of it either. So I'm sorry about that, but we're well aware. We get like 32 emails a week. I can't stand the doorbell. I can't stand the doorbell. Well, that's why you need to be in the room, Pre. I mean, we take a ton of winners, and being able to trade over my shoulder is really advantageous because occasionally I take a trade that's a little too risky, and by having that 20/20 vision over my shoulder, you can say, you know what? Both quants on the NQ are not there. I'm going to stand aside on that trade Mark just called. And if it's a winner, I don't care. It's too much risky for me. And if it turns out to be a winner, don't care about it. But I think trading collectively is much, much easier than trading, alone. It allows you to focus and I think it helps to listen to somebody else kind of give you a take on market direction, what's evolving. It helps your thought processes. And when I take a trade, make sure everything that you want on the trade is there. And if I take a trade without dual quants, don't take it. If I get a winner, don't even care about it. And then I'm telling you, you're going to stand aside on all the losers I take, and you're going to make 5 times as much money. I mean, there are guys in that room that make $1,000 a day. So believe me, it's really good advice. No, the software tells you the dual quants, the dark green or dark pink background, tight to the 50, with the candle halo, with the dual dots, with the Laguerre. Those are the trades. And listen, just take your time. Stay on sim until you feel a little more comfortable. Okay? Well, you're going to get a replay of this. I'll send it out. For now, you can scroll past the stuff that you don't want to hear. I show you in this webinar everything you need to take a low risk entry. And I'll tell you, when the software flashes you a low risk, you can read it, and I'm telling you, it's going to go for you. There's another trader in the room, Gerald, who's one of my favorite guys. He's just like you. He's struggling a little bit, but he's getting there. This week, he made money every single day this week. So just stay really patient and trade over my shoulder and trade better than me. Okay? All right, listen, everyone, thanks so much for giving me your time. I think if you want to trade the Forex, it's a terrific system. If you want the NDT alone, no matter what you trade, just give us a call. It's a terrific trade entry tool, better than anything you can do manually. And I hope to see you in the room on Monday. We'll trade the NASDAQ and we'll trade crude. Thank you so much, Ed. And if I take my vitamins and eat my Wheaties, I'm going to try to open up that Forex room. And I never just blow smoke up people's tushies. I'm serious, very, very serious about it. Thank you much, Ed. So listen, everyone, have a really wonderful night. I'll see you tomorrow in the room. Get really good rest. Let's really focus and let's make really good money. My pleasure, Pri. And you know what? Every day, and listen, hey, thank you all. Hey, Sao Paulo. Oh, thank you so much. I appreciate it. Hey, Russ, I love Brazil. And I never say this out loud, but I love Brazilian women. I think they're so pretty and sexy. What can I tell you? I'm a single guy. I'm allowed to say that. Oh, you are? Okay, well, I'll tell you. I think Brazilian women are gorgeous. I really do. I don't know. I just have something about, I think something about them. Okay, listen, I bet she is, Russ. I bet, let me tell you. And thank you, guys. Thank you. Hey, listen, I've dated a couple of Brazilian women. They're wonderful women. You didn't screw up big time, Pri. If Monday starts your new journey, you will build your equity back and you will make it. Trust me. If I told you how many accounts I blew up, you would faint. When I started trading in 2004, I blew up a $65,000 account. Okay, yeah, I mean, Brazilians at the beach, you have to just sit there and basically handcuff yourself. It's just like it's a sight to behold. What can I say? It's amazing. But you're not. You're gonna put yourself on the road, and every day let me know how much money you make or lose. Send me some JPEGs on trades that you enter. Let me critique them for you. Let me work them through with you. If you take a trade that is a winner, I want to see it. Take a trade that's a loser, screen shoot it for me and send it to me. And I'll go through all the trades with you and I'll critique them for you. I mean, let's work together and get you making money, okay? I'll do that with anybody in the trading room. You want me to critique your trades? A lot of people send me JPEGs. There's one guy makes 1,000 a day, and I get his trades, and they make my stomach upset because he gets in, he stays in long trades, but he trades early in the morning. He's up at about 7 o'clock in the morning. Wave, I would love that. Thank you. I really appreciate that. I might take you up on it. Um, yes, everyone. Hey, Ricardo, great job. Great job. If you have a beautiful wife, a beautiful Brazilian wife, and she's a sweetheart, you've been blessed by God. I really mean it. And that's really a blessing. And congrats to that, man. Uh, I mean, they are gorgeous. They are just gorgeous women. Um, okay, I really stop it. I'm gonna go to bed. I'm gonna need to take a bath in cracked ice. Okay, oh, funny, Bree. Ready to come to London, but leave your wallet behind there. Yeah, listen, I've been to London. The women there are really pretty. I totally agree with you. Um, I'm not that crazy about American women anymore. I mean, I was married once and just very materialistic, but that was my choice. I made a bad choice. But I got a beautiful son out of it. And I raised him myself, and now he's 17 and he's a big boy. And he only tortures me every other day, down from 4 times a day. So listen, everyone, have a great, great night. And I only wish you guys all the best, no matter what you do. And um, I wish you all the success in the world. Hopefully see you in the trading room tomorrow. Good night, everyone.